Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, July 8th, 2022. I'm actually starting it before the markets close. It's 18 minutes before the market closes. It's 3:42 Eastern Time, but nothing is going to change between now and then that's going to change anything in my analysis. So, looking at where we're going, we're kind of drifting into the close. So even it would take a huge move up or down, really down to change anything. So what I'll do in this video is a quick recap of the equity markets. I'll go over some key levels to watch next week, and also the commodities, because recently I've kind of married in my technical. My outlook based on the technicals, meaning the charts, along with fundamentals, and how to some degree or another, most of these different asset classes are interrelated, and lately very much so. There are times where it doesn't matter what wheat or corn or soybeans or even natural gas for that matter are doing. The equity market could give two flips. They're uncorrelated, but in this day and age, and in recent months and last year or so, the market's watching that closely because inflation is the buzzword of the day. And so therefore, as I covered earlier this week, my theory here is that we've seen a tremendous abatement in commodity prices. They pulled back pretty good, bouncing recently. I even mentioned going long those the other day. I'm going to update those trades: wheat, corn, some of the grains for a bounce. But I'm going to again go over those and look. Maybe that whole fundamental scenario doesn't play out. Maybe it does. And these are again just things to watch for. You watch for these developments going forward, and they'll help paint the bigger picture. Because if everything falls into place, I haven't wavered on my call for the rally. In fact, let's go back to that. Let's see, the post. This is the when the third target was hit. This is where I pivoted the last time from a short bias, bearish short bias. As far as swing trend trading goes to long. This was the market's QQQ, which is the main index I trade, bottomed. The bottom was exactly on June 16th, and that's when this post was made. So basically, when the QQQ hit my third target on the weekly chart, it said with a low, QQQ is close enough to warrant covering short positions and/or starting to scale to longs, which is my preference at this time. And then I just said, if you think there's more downside, then sure, you can lower your stops and hold out, but don't fall in love with it. And we've had a nice bounce so far. So that was how things looked. And here's a 60-minute chart of NQ. So we'll look at that real quick. Nothing goes straight up, but had some pretty aggressive targets at the time. I don't think aggressive, but others might. Calling for a rally up here at about 12,452. We were down at the lows 11,079. Let's look where we are now, and we'll update that first for you NQ traders. So that was a low right here on the 16th. I'm going to zoom in a little bit, but before I do, what's most significant to me was had this primary downtrend line on NQ. We also had a comparable one, similar on the Nasdaq 100 ETF QQQ, but that's been broken out and back tested. So this right here just helps to firm up the case. That was a significant downtrend line. Again, talked about it. In between, we have these little divergent lows, little divergent high, divergent lows. So that's what we've been doing. We swung up. That divergent high was the catalyst for the first leg up. We had a correction off that divergent high. Then we put in a divergent low, broke out from there, and went on and we took out the trend line. Right now, we do have a little bit of divergence forming, and it could lead to a little pullback here, or it could get burned through. Remember, in a bull trend, negative divergences tend to either get burned through completely, where you just indicators go up and then you no longer have the divergence, or they play out, but they play out for a relatively minor pullback. Right now, my thoughts are for, and I speak to everybody, I try to, investors, active swing traders, day traders, less active swing traders. If you're swinging this up, I'm still looking at those additional targets. And what was that? Let me go back to that one. That one there, and this may change. And again, these were just near-term, intermediate-term targets. I've laid out some longer targets on the daily chart. 12,452, and let's see, back to where we are now. 12,452 is right here. So we're gosh, we're a good, I don't know, 70-80% of the way there. We're getting close to that level. It's a pretty big level, but there's certainly the potential for more, especially considering this breakout. If you look at the bigger picture here, break of this downtrend line, we may just have a reaction there. So I just want to kind of show you where we're at. This is the next reaction high right here on NQ on the futures, and that's about 12,289. So there's certainly a level to look for next week. We may get a pullback off it. And again, depends how you are. If you're an active trader, a very active trader, you want to game the shorter term charts. If you want to game pullbacks in an uptrend, less active traders, less experienced traders should just sit tight and try not to game all those little things, because if you get out and you may not get back in, then you miss a big move. But this is what it looks like on the 10-minute chart. So we've had divergences building on NQ. We had a little divergent high today. We had a pullback. You can see right to perfectly. See, technicals work so well during bear markets and volatile periods. It's all traders flock to, because the fundamentals are changing so rapidly. And that's 99% of folks on Wall Street. You use fundamentals to try to figure out whether to buy Apple or Pepsi or whatever, and their heads are spinning because the data is changing so rapidly. By the time they get numbers, they wait for a quarterly report. It's up to 4 months old. It takes a month after the quarter or so to get the report, and then everything comes out. And so that's data that goes back for the past 1 to 3 months. Anywho, and a lot changes. So technicals to me are hands down the more accurate predictor, but fundamentals certainly do matter, and that's what I'm going to talk on this video. So there was our pullback day, a little quick trading off that little divergent high right there. We had actually flatline divergence there, and now we still have we pushed up, made a marginal new high. So again, that could be the catalyst, and that kind of carries over to that 60-minute divergence I just showed you back. Worst case scenario, there's no worst case scenario. Could be there is no really, that just keeps going down, down, down. New lows are the worst case scenario. But for those bullish, maybe a back test of the trend line. I don't think so. I think we came close enough already, and I think this rally is really starting to put pressure on those that remain short. And again, the charts are constructive. That's just first and foremost. So give it a grain of salt, all the divergences in the bullish price action recently, because we are in a bear market, so that you have to discount bullish charts, bullish developments a little bit, certainly for that. But right now, look, we're about to head into close. Now there's 11 minutes to go. We're almost flat. We're up 0.1% right here on QQQ, but I wanted to point out, it's nothing huge, but it's worth mentioning. This today is the fifth consecutive green candle, if we close. If we don't, and we could easily close down and make that a red candle if we close down 0.05%. But as of now, 1, 2, 3, 4, 5 consecutive candles. Interestingly enough, that has not happened in the entire bear market. We didn't have even this big rally back here. You had 4 consecutive green candles back in the March rally. Last time you had 5 consecutive green candles, and they were much smaller, was towards the right before the Nasdaq 100 peaked back in November. Again, does it mean that much? Nah, it's worth mentioning. I think it just shows that there's consistent buying pressure right now. We did have 4 candles there. That one was a little larger into the 5th day, which closes a doji. See, you can split hairs and say, yeah, it was a red candle. It means we closed slightly, but a doji means you opened and closed, and you can see you just closed a hair below the previous low. Anywho, let's just focus on the now. I do, as kind of an active trader, is that right now the trend is up, and I just really, really would like to see this previous high taken out, because that will then give us, all the makings of an early uptrend right now, and open the door for more. The more they can push it up here, the more it's going to squeeze out shorts. We had a little snafu in the video there, I'm sorry. So the more you can push it up, the more you're going to squeeze out shorts that were either shorting here or staying short. And that's how it works. Okay, so that's it. We'll see what happens here. Anyways, it looks good as of now, and of course there's the downtrend line. This is, if you just want to keep it simple, look at a lot of charts, a lot of levels, a lot of lines. It can get busy. This is the big picture here. This is a big divergent low. Nice clean trend line, and a clean impulsive breakout yesterday and follow through so far today. And, it'll help to get the PPO over this level. Certainly, this is a line that delineates bull and bear trends. When the PPO signal line, the white line is above it, the trend is bullish, as it was back here, and when it's below, as it was from here to here, trend is bearish, vice versa, bullish here. All right, so we'll see. But again, I'm only looking for a bear market rally. I've not wavered at all on my ultimate targets, which are still lower here on QQQ. Just still looking for a tradable bounce, and as of today, it's looking good. And if that changes tomorrow or next week, I will let you know. And it would be something that would change incrementally. It's not an all or none level. It's just a series of events, a series of check marks, as I like to talk about today. Bulls get a check mark. Right now we're positive, we're about to close, and even if they held it flat or even slightly red, the fact that we're holding up on most of these gains over the last 5 days is bullish, and of course that we're holding above the trend line. All right, so let's not spend too much time on that. Again, nothing's really changed. Same thing with the S&P 500 SPY. Big divergent low, 1, 2, 3, 4, 5 candles so far. Again, I don't know. I didn't count it on SPY, but I don't think we've had 5 green days since the bear market started back here around the beginning of the year. So something to note. But again, they're not huge candles. It's just persistent buying so far. There usually is at some point in a rally a catalyst, and I call it the WTF or rut row moment, or POR. I have a lot of terms I make up, point of recognition, where the bears, those bearish thinking that we're going a lot lower, realize something's wrong. The market should be going down. I've been shorting the rips into resistance, just like the dip buyers. I told you the same thing back here. I was an adamant bear telling you we're going down here, saying that you get the dip buyers like Pavlov's dogs. They buy the dip, and it works so well for so long they just become ingrained and accustomed to doing it. And then you get that POR, point of recognition moment, where they realize, wait a minute, something's wrong. I keep buying the dip and I get my bounce, but then we keep going lower and lower, and that's where they start to capitulate and they start to sell, and there's a paradigm shift in thinking collectively. That's what the stock market's all about, trying to figure out and read what the masses are doing and thinking. And so anywho, that's just kind of the mentality of how things work here and the mindset, and we'll never know. But you can't get in everybody's head. You can talk to people, you can turn on the TV and listen to people, but at the end of the day, this tells us what people are thinking, because the stock market in its purest form, charting, technical analysis, it's a historical representation, or a live representation of where buyers and sellers are meeting and who's winning. Are there more buyers at any point in time? If there are, stocks go up. If there's more sellers, they go down. It's that simple. And then you can see the battlegrounds where they fought before, and those are support and resistance levels. So right now, I'm looking at this level here, about 389.71, right about where we are here below. In SPY, it was support right here, a lot of candles there, a lot of closes, especially the bodies, the fat parts, a big old gap, a gap down below it there. We tried to take it back on 3 different days. We backfilled that gap, powerful move. I was talking about trading these gaps back then. Rejected day 1, we stopped there. I wouldn't call that a rejection, but we parked at the top of the gap, this gap. Day 2, tried again, parked about right on it. Day 3 failed, and when the buyers saw, or the market participants saw that the bulls could not take back the gap, they sold it quickly, backfilled it, went down. Now we're there again. So if we can pop that level, it should take us up to the next resistance, give or take around 397, so forth, so on. And then you also have a trend line that comes into play on the S&P 500 that will, a potential trend line. There's a few reactions early on. So again, I'm still eyeing this level, and these are and have been swing targets for a while. These trading ranges here from back in late May, early June. So that would still be, considerable upside. And again, do we have to go straight up there? No. We could certainly pull back, and if we do, then we'll look at support levels that should hold. And if they don't, if and as each of these support levels are broken, well, that's going to increase the odds that, hey, maybe this was just a short-lived bear market rally that had potential, looked good, nice setup in the technicals, but the sellers overwhelmed the bullish technical setup there. Okay, we'll go through the commodities real quick, both as trade ideas and as a kind of a potential guide for what the market may be thinking, what market participants may be thinking. Again, inflation's been, without a doubt, one of, if not the most driving force right in the markets in recent months, because it has handcuffed the Feds and forced Powell the easy to not be so easy. It's against his nature, but he had to all of a sudden pivot, and he ate a lot of crow and continues to eat that. Anywho, so you had it was priced in. Nothing goes up forever. Commodities got ahead. I'm still longer term bullish. I still believe they're in early stage bull market action, but they've had a nice drop. Again, DJP is one of the most diversified and balanced commodity ETNs or ETFs, ETN, and it's down 25%. Now it bounced. Nothing goes down forever. I told you the other day this was a factor. You can see we had a little bear flagging action there. Played out almost perfectly. There was a move down, flagpole followed by the bear flag drop, and we kicked back. And so, the other day, I highlighted this, said it'll probably come into play here as a factor in the market. And I don't. It's not been reflected in the Fed minutes, which were kind of dated by the time they were released, anyways, earlier this week. And what some of the Fed members are saying, they're still talking about, and we'll probably. Here's what I think. I'll bet my money we get a half-point hike, not the 3/4, possibly the 3/4, because the Fed's saying the market's okay with it. It's been talked about. Whatever, you can go and Google Fed funds futures, and it'll tell you the probabilities down to the penny right now. What the smart money's betting. There's Fed fund futures and professionals typically trade Fed fund futures, and they're betting, and rarely have I seen a surprise there. So whatever that is, and I don't even care whether it's 50, 75. My point is that the market's been going up in the last 5 days, knowing that's coming, so it's kind of okay with it. And this is what I think the smart money's looking at, what I'm looking at, what I call my real-time inflation indicator. And so whether the Fed's kind of backed off, they have not, at least not in rhetoric yet, backed off their dot plot, the projected hikes, but I think they will, especially if this continues. So let's talk about that. All right, so we had a bounce back, and I told you there are a lot of things that support setting up for a bounce. Wheat commodity, I'm going to show you wheat because I mentioned that one going long the other day, in corn. Wheat is WEAT. Wheat, nice bounce. Wheat was at support right here. Nice bounce, but I have to close that one out today. I use wheat futures. I'll show you that real quick if I can find my ZW chart. And I'm not shorting it because sometimes I'll close a trade in reverse because there could be some more downside here soon. I'm sorry, a little more upside first, but this is what I was targeting. 830, 893 and a half right there. It's the first and only resistance level I had on the chart. You had a nice divergent low, and that's why I could see some more upside here, maybe, but they're down pretty good. So this would be a max target if you are in wheat and swinging it and you want to get more. 917 and a half is the next resistance level I have. There's a little level there. So there's potential for more upside, but what I think is going to happen with wheat, again, I just want to catch, I call these bounce trades. When something's pretty oversold and you have a nice setup there, get the bounce, get in, hit and run, get out. Wheat bounce just in the last few days, 13%, but that comes on top of a drop. This is the inflation abatement trade right here. The fact that inflation's abating, wheat has dropped 42%. So I've gone over this. Crude oil, natural gas, went over those extensively this week. A lot of things, a lot of hot air has come out of the inflation numbers, but they're not priced in. You're not going to hear about those for a while because the reporting periods are so lagged behind, and it's just that's it. So that's inflation real time. So we could go up a little more, but let me show you on wheat, WEAT. Go back to that. What I think will probably happen here. See this yellow trend line on the ETN wheat? You've got a nice primary uptrend line. That is not the tool I tried to grab. I tried to grab an uptrend line. We came a little shy of it. We're kicking back. So there's my max bounce target. If you get it, it most likely will be shorting there, and it'll probably coincide with that level I just gave you on wheat futures. But we may not get there. This was a leg down. We could just come down. I think we're going to, whether we bounce a little more or not, and that's why I'm out of it for right now. I think we're going to come down and check that trend line, and that's the time to get long again, and that's probably the next leg up in commodities. So what would be the perfect scenario for me, and not just wheat, I'm talking the grains move together, but most commodities see another leg down soon. to hit some of these deeper targets, and that would coincide, I think, with a more upside in the stock market. People would you'd hear more and more buzz about commodities finally falling, Fed's doing their job. Guess what? Wow, these interest rate hikes have really worked. And again, I told you earlier today, the Goldilocks scenario, if the economic indicators hold up, like the employment numbers today, then that's the anti-stagflation trade. Now you have economic growth instead of contraction, and you have deflation instead of inflation. Now, I'm talking a micro picture here. I still think we're in an inflationary period, that the cat is out of the bag and it's here to stay. I'm just talking weeks now. I'm just looking at my intermediate term, and I'm getting a little bit granular here, a little complex. So this all doesn't have to play out. I always say trade each chart, each security on its own, and also trade diversified. That's my big thing is, don't put all your eggs in one basket. Don't put it all in the NASDAQ 100. Don't put it all in oil, corn, wheat, soybean, Apple, whatever your thing is. Hedge your bets. That's what I like to do. And some days I'm getting beat up on my oil shorts or my NQ longs, but then three other things are offsetting that, and it's more palatable. All right, so there it is. There's my thoughts. You can see the charts. Things like corn as well. Again, they mirror each other. Corn hit support, good support. That was a major reaction high back from 2021 and bounced as expected, right? And the max bounce target, or be a nice short entry, would be a bounce all the way back to the trend line, but we may not get there. We could come down. Again, I don't know. We're kind of in no man's land. I would put coin toss odds if we're going to go up and hit the back test. JJG, the grain ETN, holds corn, soybeans, and wheat. And again, they're all going to look the same because they're all competitive food sources. Corn, soybean, and wheat. And soybeans is SOYB. And so you can see, and here's an example of one. SOYB broke this support right here, put in, like all the others, divergent highs, broke down, broke support, had a quick swoon down, and it's close to back testing now. And that's why if soybeans is the first to run into resistance and then they get rejected and come on down to this next target here, corn and wheat may fall shy of those back tests of those trend lines I just showed you. So there's my mindset. And again, doesn't have to happen. And maybe commodities keep going up and the stock market goes up. Maybe the commodities fall and the stock market starts to fall. Again, I'll trade each on their own technicals. This would just help to formulate my intermediate bias, in other words, where I think things might go over the next few weeks to even couple months here. And commodities aren't the be-all, end-all, but they are a big part, energy being the biggest component, one of the biggest components of the consumer price index. Housing, you can Google search. A lot of housing trend charts are online, free information. You can get the most recent. Zillow even has market data facts, market statistics and all that. You can get stuff there. But USO oil, I think that's about to take another leg down. We had a monster short, caught most of that trade off the top, even some long bounce trades. But look, you can see on USO, we're bouncing back to resistance. You have this uptrend line right here, and you have price resistance. So uptrend line, breakdown back test, price resistance 78.41. Not huge resistance, but worth it. It's been on the chart for a while. There's the next trend line if that gets taken out. But remember, we're coming off a very big divergent high. And I know there's a lot of people right now who want to debate me, Randy, how oil is going to keep going up. Russia's not leaving Ukraine anytime soon. And even if they did, we're going to be all that Russian oil off the market, blah, blah, blah. I don't, again, how much of that's already priced into this? How much demand destruction is already priced? And we don't know. I'm just going to trade the charts as is. I'm going to show you CL, and this is also a dual fold here. This is a trade idea, or if you don't want to trade crude at all because it's volatile, whatever reason, it just if this pans out, then again, it's going to help support that. We'll call it abatement and inflation trade, which should again be net bullish for the stock market because that should allow the Fed to kind of back off the accelerator a little bit on the or quit tapping the brakes so much. All right, this is a 10-minute chart of CL. I had just had it up because I'm trading it. I'm going to go to the 60-minute chart in a second. So short, very short term, you got pretty decent resistance here, about 105, which CL just ran into, and you have this. I just drew out this bearish rising wedge, complete with negative divergences right there. So a break of that wedge. I mean, you can short number one resistance. I'm short here. Next sell signal would be a break of the wedge, the uptrend line, and then a break of the 101.68 level there. Okay, zooming out to the 60-minute chart, and again, this one would have a bigger impact, I think, on the market than corn, wheat, soybean combined. This is crude oil, energies, hits everybody in the pocket: airlines, individuals, transportation, even manufacturing, plastic, even the gold and silver miners that I've highlighted today. Rising oil prices hurt their bottom line. It is a very energy extensive process to pull gold, silver, and platinum and palladium out of the ground. All right, they're not, you can't just go pan out of a stream anymore. All the gold that was floating around the surface of the earth that's long been snapped up. So you're digging deeper and deeper to get it. Anyways, this was the last sell signal here. We zigzag down T1, T2, 3. Big major trend line here. Remember, that was my final target on the last short trade, swinging it down off the highs. As expected, hit the trend line and bounced, even reversed it, took a long trade there. But we went on to break that trend line. And we broke it. And this shows you how important it was. It wasn't just important to me, but it was important to a lot of traders because you waterfalled right down once you took it out. And then right here, nice positive divergent low, bullish. 60-minute chart. Trying to get my line tool here. I'll zoom in for you so you can see it better on the video. And the takeaway is, off that divergent low, we bounced. There was a long trade to be had. And then, boom, we are back testing the trend line from below. Back test 1. Back test number 2 right now, today, with negative divergence. Gotta like that. Doesn't have to play out. Stop somewhere in here, layer out, hard stop, loose stops, whatever you want. There's also a downtrend right there. But as of now, you have negative divergence while you're back testing. And so that could give us another leg down in crude. And that, if it does happen, should be net bullish for the stock market. Natural gas, September contract. Same thing here. We also had a monster short on that one. These futures roll, so that old chart's not marked up anymore. This is a September futures. We hit that trend line there. Look at all these reactions. Nice clean trend line. Finally broke it, just like crude. Waterfall down through there. Put in a divergent low recently. There's your positive divergence right here at this low. Rally back up right into the trend line and reject it. So, that's a short on natural gas there with a stop somewhat above. And see if we can get another leg down. If so, then that should be pretty bullish for the, or net bullish for the stock market. It should provide a tailwind. All right. Okay, and I could go on and on and on and go through numerous agricultural commodities and industrial metals and energy. But I kind of hit on the gist of it, and that's it. So I'm looking at, we did bounce in just about all of them recently, but I think there's most likely another leg down, where there's a little more upside in some of the individual ones, but some are already hitting resistance, so I'd rather be overall near term looking for another leg down on the commodities. And if that happens again, based on that logic, if it plays out, then that should be a net plus for equities and help get us up to those longer term targets on QQQ and SPY. I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.